Hey traders, checking in on the stock market today. Tech sector bulls started the day really strong, but we also saw significant profit taking the second half of the day. Is it finally time to see the NASDAQ futures chart break the pattern of a higher low every day and see some pullback? We've also got the FOMC tomorrow, 2 p.m. Eastern. I'll show you what I am looking for to come out of that meeting. Spoiler alert, it has nothing to do with what they're going to say and everything to do with levels on the charts. So the patterns that I am watching, the higher low every day on our futures chart, both the S&P 500 and the NASDAQ are seeing that same pattern. The S&P 500 just closed day number 8 with a higher low every single day. Once we see that pattern of a higher low or a lower high every day for 5+ days in a row, that's when I start only paying attention to that pattern, because I know that's all the information that I need. If we do not break that pattern, there is no pullback that has any follow through. So we closed in the middle of today's range, and if we see a break of that low, then daily consolidation will finally be underway and there'll be plenty of space for a daily higher low. SPY, not the same setup because we did break the low of Thursday on Friday, but same story. If the low of today, 395.08, breaks tomorrow, I will consider that the top of the V-shaped bounce, and we will then be scouting the daily higher low. NASDAQ futures chart, same deal. Higher low every day, only 7 days in a row. We are in the middle of the range today. We pulled back notably. We started the morning extremely strong, and then we pulled back pretty darn significantly for 4 hours, a solid 1.5% pullback. And now on this bounce, we're watching for an hourly lower high. Bigger picture, I'm watching a 4-hour uptrend that is easily intact at this point. And we would have to see a break of this low of 13,056. And that low was hit earlier this morning, actually late last night, 8 p.m. last night. So where was QQQ at 8 p.m.? We would need to see a bear break of 318.50 if we were going to align it with what the futures chart is doing. I'm at a point right now where I am only looking bearish on QQQ and on the sectors that correlate to it. And the EV names, Tesla and NIO, are the ones that I'm watching. They were weaker than QQQ today. So when QQQ started pulling back, they pulled back much more notably. You look at this QQQ daily chart, clear up at the high of the bounce, but you compare that to Tesla, didn't break the high of yesterday, didn't break the high of the bounce. NIO, same story, sideways for 4 days. So I'm starting to see weakness in other names. Another name, DDD. Just a monster 50% bounce topping out today. So some little subsectors and some individual names are already breaking the pattern of a higher low every day and starting daily consolidation. So that was a little clue for me for watching for the NASDAQ to do the same. So again, it doesn't mean I'm just blindly going bearish. It just means that I have a directional lean on the trades that I am taking from here in the short term. I will probably be a good bit cash into the FOMC because I don't like coin flips, and I usually trade the reaction to the FOMC as opposed to establishing positions leading into them. But from a day trading perspective, I am watching for bearish entries and daily consolidation on those names. IWM, higher low every day for 6 days. That broke today. So there's another little clue. And daily consolidation is clearly underway. When daily consolidation begins on names and sectors that are seeing moves like this, we then look for hourly oversold conditions, which did hit at the end of the day today, and we watch for hourly trend changes to set up back to the bulls to indicate a daily higher low has been set. Remember our lesson, I guess it was last week, on fib retracements. So we can look at the low of the move, the high of the move. Is it a bull flag? As long as the 382 retracement holds, that potential for a bull flag remains. If we pull back under that level, then we're going to be looking for an equilibrium. So the amount of consolidation helps determine the probability of either continuation or a tightening equilibrium. So the next 2-3 days are going to be very telling. And again, keeping in mind that some names have started this pullback, and some names like the S&P 500 and NASDAQ futures have not done so yet. Financial sector, so daily consolidation continued. Anything above 33.52 is a daily high or low. We know the financial sector is going to see a notable reaction to the FOMC just because it is one of the most impacted sectors. And we're either going to lose the daily uptrend by breaking 33.52 support, or see a bullish reaction and have a new daily high or low set right off daily EMA 12, which has held the last two periods of consolidation and is a good visual guide. So that's what the FOMC is going to determine for me. Three things. Do the S&P 500 futures start consolidation? Do the NASDAQ futures start consolidation? And does the XLF daily uptrend get lost? Those are the three things I'm watching for. I don't care what Powell says. I don't care if he starts singing about rates. I don't care if he says inflation is the best thing ever. I don't care anything to do with the words. The only thing I care about is the charts. Full disclosure, I've been trading and following the FOMC for probably 5 years very closely as far as, being aware of the FOMC and that event. And I have never once read the words that are said at the meeting or on the minutes or anything. Not to say it can't help some traders, but it just has nothing to do with what I do personally. Healthcare sector. Higher low every single day pattern still intact for day number 8 in a row. Bears would have to break 114.90 tomorrow for that pattern to be lost. And then same thing, we watch for hourly oversold. If I want to be an aggressive bull, I'm going to enter hourly oversold. If I'm a patient bull, I'm waiting for an hourly trend change back to the bulls to set up scouting a daily high or low. Another way to do it, let's say I'm playing XLF hourly oversold bounce today, and I make an entry at 34 as we just start getting oversold, and I sell half of it at 34.20. I can stick a stop loss, break even, 33.80, and say if we form a daily high or low off of hourly oversold conditions, I nail the bounce. I nail the entry. If we don't, I stop out with zero risk, and I am then back to all cash with a clean slate to make another attempt at the daily high or low. And I did trade this hourly oversold bounce. I'll go over that at the end with a couple other trade reviews. So S&P 500, NASDAQ, and XLV, all with the higher low everyday pattern that has not broken yet. IWM has broken it. And we're watching to see if the sectors are going to follow the names that have already broken bearish today. Biotech sector, pulling back today, not following the QQQ strength this morning. Low of Friday is a key support level for a lot of names. Tesla, NIO, they're all right at their low of Friday testing that level, and the biotech bulls broke that support level by 30 cents. So I am considering this the most significant sign of a top of the bounce being set, and we're scouting a daily high or low, anything above 128.44 with tons of space for it to form. SMH Semiconductors participated with the tech sector bulls this morning and saw the same profit taking. So just to, I don't want to confuse people, but to summarize the last 2 days, on this bounce, on the drop and on the bounce, we've seen our notable sectors, and we've been our laggards, financial, energy, airliners, cruises, etc. We've seen our tech sector, the semiconductors, the biotech, the MJ, the solar. We've had these groupings, right? Yesterday, XLF started daily consolidation. None of those sectors that have been following XLF very closely saw that same consolidation. Energy did. That was the only one. Everybody else didn't. Today, they all started following, and they dropped back. And again, you just got to go through and just look at cruises. Big red day today. Airliners, big red day today. And hotels, big red day today after the green yesterday. So it was a 1 day lag. Today, I'm seeing the same thing on the other side. QQQ, bull, all bull to start the morning. Semiconductors went with it. Solar names, EV names, MJ names. Who else? At least those three did not follow. So we're seeing correlations dissipate to a certain degree. So just noticing those little shifts for things that were really clear cut. Everybody's doing this and everybody's doing this. And now we're starting to see some variations. So SMH started the morning strong with the tech sector, saw the same pullback into the end of the day, and we look at the increasing bear volume, we're looking for an hourly lower high to be the result of next bounce, and it's then up to the bears to confirm an hourly downtrend for daily consolidation to notably be underway. We're looking at the low of yesterday, 236.71, and then we're looking at the low of Friday, 227.75. So here's the solar sector, which didn't see any of the morning strength today. It has notably topped out last Thursday at 99.16, and we're pulling back. And again, another name right around the low of Friday. We did break it without much follow through, but we're at a point where we can convincingly say the top of the bounce is set, and we're looking for a daily high or low, anything above 80.80 over the next few days. MSOS for USMJ, consolidation day today, and the Canadian MJ names pulled back even more significantly, down almost double-digit percentages after seeing a significant bull move the last 6 days. So profit taking, APHA, high or low every day, 6 days. That pattern has broken. It looks like a top of the bounce is set. For MSOS, top of the bounce certainly looks set. And if we break 46.27, then that will be more convincing. We do have earnings on a major name, Green Thumb, in the sector tomorrow, so that could influence things as far as how the correlations continue with QQQ. But a profit-taking day today after the inability to get any bull follow-through over the high of yesterday. And that was a clue. Look at this clue. So MSOS broke the high of yesterday by 2 pennies, straight into a big drop. APHA, rejected from the high of yesterday, bears controlled the day. NIO, rejected from the high of yesterday, first thing, bears controlled it. Tesla, same thing. So that little morning rejection and the inability to break the high of the previous day gives the bears that confidence. And of course, QQQ blew through its high of yesterday, so that was certainly not on the table. The dollar changed the 4-hour trend bullish with no follow-through. So it is a daily higher low now set at 91.36, and the bulls are going to have to break the high of 92.50 for continuation of this bull move. What I am looking for is a daily lower high compared to 92.50. And if you are a metals bull, the metals have been impacted the most by the dollar recently, or if you're a stock market bull or a crypto bull, which have been impacted less, you want to see a confirmed daily downtrend. If you are a bear of any of those things, you want to see continuation of the uptrend. And of course, the third possibility would just be a tightening equilibrium and a break sometime early next week. We'll be watching the reaction to the FOMC tomorrow. The biggest reactions in the FOMC in general are the financial sector, the metals, and the dollar. So gold changed the daily trend, but pretty much a double top. We broke resistance by $2 or something, insignificant. If we see a daily trend change with no follow through, it's a potential weekly bear flag. So the metals bulls definitely want a bullish reaction tomorrow to the FOMC, because if we do not get it, weekly bear flags are a possibility, especially if the dollar breaks bull. The opposite scenario would be the dollar breaking bear, the metals breaking bull, and seeing follow through on the daily trend change. Silver much weaker than gold today. It didn't even test that resistance. It's still in the tightening range. And if it's a bearish reaction to the FOMC, we're looking at 25.38. And if it's a bullish reaction, we're looking at 26.46. So range bound and looking for the FOMC tomorrow potentially to dictate whether we're heading towards short-term resistance or short-term support. And the burden of proof is certainly still on bulls at this point. The miners broke bullish yesterday, but no follow-through, getting a little bit ahead of themselves because the metals are proving nothing. We had this falling wedge. The falling wedge broke bullish. But again, we know the bulls aren't going anywhere unless the metals come along. Best case for the miner bulls would be a back test and hold of this previous resistance, now support. Have the metals change their daily trends and have the miners see continuation of this bounce. Oil's getting tight on the daily. Inventory report tomorrow. It's probably going to dictate short-term direction. We've got our high, daily higher low, daily lower high, and we held support today. So a bear break confirming a daily downtrend and confirming weekly consolidation would be a break of 63.13. And weekly consolidation has already started in XLE and XLF. It has not started, actually, you know what? It has not started in XLF. It has already started in XLE. The energy sector broke the low of last week. So the energy sector is consolidating while oil is still holding the daily uptrend for now. We'll see if that remains the case after the inventory report reaction tomorrow. Natural gas trying to get a bounce going. So we know we were very overextended on a lot of time frames. Big enough bounce on the 4-hour that bulls are going to be scouting a 4-hour higher low. Aggressive bulls scouting a 4-hour higher low and hoping for the trend change for daily bounce follow through. That being said, anything under 2766 is just a daily low or high on this bounce. So, long story short, higher low everyday pattern on our futures charts. Higher low everyday pattern on an XLV, both on watch tomorrow. I have a bearish lean. Aside from maybe some little short-term oversold bounces, I am not trading QQQ and the names associated with it bullish until I see that futures chart set a daily higher low. Even if it's 1 or 2 days of consolidation, I just need a daily support level established for me to have comfort going bullish at these levels. So trades that I took today, had a pretty solid day, just feeling comfortable and confident. And it was, and another note, I am definitely still feeling my body impact from the daylight change, time change, which is notable. And that is something that I factor in on a daily basis because I'm not 100% if my times are all thrown off and if I'm now doing my morning routine in the pitch black again, just when it was starting to align with my body clock. So again, that's just something very minuscule, but it can have a notable impact. And again, that's self-reflection and just observing, you know, if I'm sitting here, my eyes are starting to get heavy at a time of the day when that's odd, it's because of the time change. So first trade this morning, APHA, oversold bounce. 15-minute RSI, oversold. We dropped down real quick into the low 20s. 15-minute RSI. The 5-minute RSI was down in the teens. And I said, okay, I'm interested in a bounce. And I scaled in on this second leg down here. And I had an entry at 21.32 maybe. And I said, okay, I'll enter my second position if 21 breaks. And then I'll put my stop based on dollar levels. And at that point, my stop went under 20.70. So I got filled at 21.32. Second fill was 20.92 perhaps, something along those lines. So that gives me a break even of 20.12. So I sold half just above 2012 on the initial bounce to drop my break even a little bit. And then I even sold a quarter to sell a little bit more on that initial bounce. So I got my break even down to a fairly comfortable level. From there, I was scouting an entry on a 5-minute higher low, but I also started to get a little bit cautious. And I started to get cautious because in the back of my mind, I'm saying, okay, I know we just went 60+% on the daily chart with no consolidation. We just rejected from the high of yesterday. It's looking like daily consolidation is starting. And if we're going to see that clear shift from all bull massive move 6 days to consolidation, I know shorter term RSI levels can get overextended. So if I'm making a trade based off of 5 and 15-minute RSI, I need to be extra cautious here. And initially I wanted to target the 15-minute EMA 12 resistance for my exit on the remainder of my position. And just watching the bounce play out, I bailed on that target and exited in the upper 2148s because I was recognizing this comparative weakness. And at that point, both the 5 and 15-minute RSI had cooled off. And it ended up being a 15-minute bear flag. But if I'm in a trade based on 5 and 15-minute RSI being oversold for a bounce, and then that bounce starts to take place, and the 5 and 15-minute RSI are no longer oversold, I no longer have a reason to be in the trade. My reason for being in the trade is no longer the case. So it was an insignificant, maybe it was a half-day maker. So it was a nice little start to the day, but wasn't comfortable and confident with the bounce follow through. So that's how I started the day. From there, took another trade, XLF. So XLF, dumped. 15-minute waterfall. 15-minute RSI was in the teens at the low. Hourly RSI was oversold as well. And I didn't even realize it. I haven't traded XLF in a really long time, maybe a few weeks at least. And we're coming off all-time high. So we know our back burner trade. First 5-minute oversold conditions and first hourly oversold conditions. I didn't even realize that I was trading XLF in an hourly back burner setup. First hourly oversold conditions coming off the all-time high. So I almost like that fact, because for me to trade this name for the first time in weeks, it's almost like my inner subconscious was aware that that was the setup without my outer conscious, without realizing it. I did not recognize that that was the setup, but I'm glad that I took the trade. So rather than trading the leveraged ETFs, I just chose to trade XLF and just do so with way larger positions than I normally otherwise would. And that's because the volatility on XLF is way smaller. So, if I want a 0.5% bounce to be worthwhile, I'm going to trade with 3 times. I traded this bounce with 5 or 6 times the position size that I had on APHA's bounce play. So I was just watching the 2-minute time frame, knowing that I'm looking for an hourly and a 15-minute oversold bounce. I saw this low, and I saw a big enough bounce to scout the 2-minute higher low. So I made my entry on this consolidation at 34.02. We then hit a brick wall. Look at this 34.07 brick wall. And I said, all right, we're not really getting over it. And after enough rejections, I sold half at 34.06. So now my break even is 33.98, and we then got bounce follow through. So again, I was in a very large position at that point in terms of dollar size, but it's a much less volatile name. That big bounce on the hourly was just 1%. So I then we did eventually get follow through after I exited my half, and then I just scaled out into that bounce, just looking for the 15-minute lower high, and I exited all of that position at the 15-minute EMA resistance. So again, it only ended up, the percentage gain that I probably had on that position was maybe 0.3 or 0.4%, but because it was a very large dollar amount for me, it was worthwhile. One failed trade, PENN. Back burner, first hourly oversold conditions coming off the all-time high and looking for a daily higher low. So that was the setup, and it was just a waterfall on the hourly, and I'm sitting there watching the 15-minute, the 5-minute, everything's getting extended, and I was watching a 2-minute falling wedge, and I really liked this setup, but here's an example where correlations came into play. So I was watching this 2-minute falling wedge, and again, it was a beauty up to a certain point. And I made my entry here. So yeah, same story. 2-minute bounce big enough for me to anticipate a 2-minute higher low. And it was right off the downtrending support line. So I made an entry at 125.77. And I didn't put my stop right under the low. I did use 125 because, again, with a falling wedge, you break support, get no follow through, and then start the bounce. But why I was staying a bit more aggressive with my exit is, number one, another rejection from the resistance line. But while this was happening, let's see, I made my entry right around 210. I was watching QQQ because you know me, I love my correlations. They give me clues. And I knew that QQQ weakness at 210 was impacting this trade. So where's 210? So I made my entry right around here on this QQQ bounce. And I'm saying, all right, QQQ, give me a 5-minute oversold bounce to help with this pen bounce taking place. And I was entering right here. It ended up being a 5-minute bear flag, and then we dropped real hard. And it was this real hard drop to some more extreme 5-minute RSI levels than we've seen in a while on QQQ. Again, that's from 2 o'clock. No, let's go 2:15 to 2:40. And at that point in time, that is when pen broke its falling wedge bearish. And it was because of the added downward pressure in QQQ. Where was the low of the day hit? 244. And QQQ's low of the day, 240. So very correlated to it. And I bailed on pen for a small loss because QQQ was not showing me any signs of a bounce. We ended up getting some decent bounce, but at that point, I was not going to risk a drop down to 123 from my entry in the 125s. So that was keeping a fairly tight leash, and again, small loss, stopping out quick, and not wanting to just perpetually try and enter an hourly falling knife. You know, hourly oversold and hourly back burner is a nice setup for the trade, but that's not everything about the trade. I have to see the price levels changing trends on the shorter term time frames and seeing bounce follow through. It's obviously possible to reach first hourly oversold conditions coming from the all-time high, and if the broader market is seeing some notable weakness, it can lead to, rather than the hourly RSI maybe bouncing from 28, we can drop right down to 22 if the broader market correlation is dictating that. What else? There were a couple other trades in there, but those are the main ones. Again, decent little day. That's now either 7 or 8 green days in a row after 4 red days to start the month. It's going to be we'll see, but it's probably going to be my lowest monthly gains out of the last 6 months. I've been, like I said, on a 5-6 month tear, and that's just fine with me because, again, I stumbled and started with a losing streak. So now just the base hits, get my flow back. Just half day to 2 day makers every day over the last 7 or 8 days, and just getting that feel back for being confident and comfortable. And we'll see what the FOMC gives us. Scouting bearish if I like the entries. Scouting hourly lower highs on QQQ. I keep looking to my left because there's a herd of turkeys eating stuff in my driveway. All right, I'm gone. Brain's gone. I forget what I was going to conclude with, but we'll see you next time.